Naija, which way now?
Today, we're going to be talking about the new tax laws in Nigeria. On June 26, 2025, President Bola Tinubu signed four landmark tax reform bills into law. The law unifies fiscal legislation governing taxation in Nigeria, and it repeals 12 legislation while amending 15 others. And this is what analysts have been saying since the new tax law became effective. They say that this is transformational and it's going to change the way of doing business and the level of revenue generation that is possible in Nigeria. What we are sure of is that these bills are transformative, and it's going to impact our economy at all levels. The changes affect VAT collection and distribution, small business tax requirements, development levies, personal income tax, capital gains, corporate tax, among many other revisions. As the bill has now been signed into law, many Nigerians still do not know what it means for them. So we want to find out if this bill will create a better Nigeria. We have with us today to shed light on the new tax laws Mr. Peter Adebayo. Mr. Adebayo is a seasoned practicing chartered accountant, a tax and management consultant, an accounting graduate from the University of Lagos with an MBA from the Lagos State University. He is a fellow of the Institute of Chartered Accountants of Nigeria, ICANN, a certified professional forensic accountant of Institute of Certified Forensic Accountant in Canada. He is a member of Chartered Institute of Taxation of Nigeria, CITN. Also, a member of the Nigerian Institute of Management, Chartered. He is an alumnus of the Lagos Business School, Pan African University, and a registered professional member of Financial Reporting Council of Nigeria. Peter Adebayo, CFCA, has over 30 years of experience in corporate and professional practice. He is currently the managing partner of Peter Adebayo and Co., a registered and ICANN licensed professional firm of chartered accountants. He is the lead consultant, CEO of 261 Consulting and Professional Services, and principal training officer at 2612 Training and Human Capital Development Center. So we couldn't have found anyone more knowledgeable about this. He's one of the brightest minds when it comes to the topic of taxation in Nigeria. That's why we thought it was very important to invite Mr. Peter Adebayo to this show, and we are very glad and grateful that he would honor our invitation. I will be here today to share with us how the tax laws can create a better Nigeria. Thank you for coming, Mr. Adebayo.
Thank you very much, my brother, for having me. It's always a pleasure.
All right, great. We'll go straight to the matter. The first question is this: in just 3 minutes, or however quickly you can put everything together for us, tell us what we don't know about the tax laws that we need to know.
Well, without having to start talking about the names of the tax, there are four laws that were signed recently by the government. And the first question I do ask people is, why are you happy paying tax? Practically, if you look at this environment, most people are not happy paying taxes because of the apathy, or I mean, due to the fact that they believe they're not getting value for it. Well, that's the reality. We must pay taxes. Now, the newly signed tax laws, which are occasioned by the need to understand or the need to undertake tax and fiscal reforms within the Nigerian economy. They are not predominantly to generate revenue, just like a lot of people assume. They think it's just to generate revenue. Well, they are all to achieve some basic objectives, which among others include modernizing Nigerian tax system, streamlining our tax collection processes to foster greater efficiency and effectiveness, to enhance fiscal governance, to foster revenue transformation, consider adjustment of tax rates across different sectors of the economy for equity and fairness, and generally, of course, to facilitate sustainable, inclusive economic growth and development, and transformation in Nigeria. Now, the laws are actually aimed at relieving people from the burden of taxes, particularly the low-income earners. More than one third of workers, both in Nigerian private and public sectors, they will completely be exempted from paying taxes under the new regime, through the pay as you earn system, of course, by virtue of the income bracket they belong to. And when you also look at the MSMEs, over 90% will no longer be burdened with payment of company income taxes. They will not be burdened with charging VAT on their invoices. And of course, they will not be liable to withholding tax deductions on their business incomes. Of course, zero rates, of VAT on essential commodities, which, presently take the chunk of the workers' disposable income, meaning that any elements of VAT on food, education, transportation, accommodation, housing, medical and healthcare, among others, are going to be completely removed from taxes as a huge relief. So the laws are addressing tax evasion as against tax avoidance, thereby making it more expensive for taxpayers right now with stiffer penalties, while simplifying and encouraging tax compliance with incentives and reliefs under the relevant provisions.
Right, great. Thank you very much. I think the really important thing there is just the change of approach, encouraging people to pay tax. So the next you've kind of touched on a few of the what I was expecting to hear in this next question, and I want you to highlight for us the topmost implications of the new laws on three sectors: the government, state and local governments especially. I know there has been a lot of back and forth between the states. There was a time when I believe the Rivers state government and the Lagos state government went to court. Have those issues been resolved? What does this new tax bill mean for the government? The second level at which I would like you to approach this is, what does it mean? And this is where you touched a little bit on what does it mean for the business, corporate businesses, small and medium-sized businesses, individual proprietors. What does it mean for them?
What?
And thirdly, the third level is, what does it mean for you and I? What does it mean for individuals? And talking about that, I want you to kind of look at it in the from the angle that there are different kinds of Nigerians. Some are very rich and some are very poor. What does it mean for the rich? What does it mean for the poor? Go ahead.
Well, as a matter of fact, before going to the tiers of government, state, local, and federal, the one thing that is very significant about these tax laws, as far as individuals are concerned, if there are people that will feel the impact more, they're actually the very rich in the society. And there are people who are going to benefit. It's actually the poor, the low catered income earners, because it is centered around not taxing poverty. It is centered around enhancing the disposable income of an average Nigerian. Taking a look at the implications on of the new laws on states and local governments, business, SMEs, individuals, I will look at it from the following perspectives. There is what I call VAT modernization and input recovery. There is the new VAT revenue sharing formula. There are penalties and disclosure requirements. We have reform of the personal income tax, among quite a number of other things. Of course, there is the institutional restructuring and the tax onboard office, which has just been established. Now, talking about the VAT modernization, one good news is that the VAT rate remains at 7.5%. But the NTA, now, the NTA now is not Nigerian Television Authority, Nigerian Tax Act, now permits input VAT recovery on goods and services. Now, the new VAT revenue sharing formula, with the NTA now, it revises the distribution of VAT revenue among the tiers of government. For the federal government share has been reviewed or reduced, as the case may be, from what it used to be 15%. Now it's going to be 10%. That's the share of, a federal government. and that's how it affects the government at the very top. Now, the state governments used to earn 50%. Now they're going to be receiving 55%. So that's an upward, an upward benefit of 5% in their favor. Of course, the local governments, they retain their share at 35%. But one other thing that is very significant with this tax law, with particular emphasis on how it's going to affect the tiers of government, is the sharing formula. The combined share of states and local government is now allocated based on the formula that considers equity. In other words, 50% will be shared equally among the tiers of government, among the three tiers of government. Now, there's also population. 20% will have to be shared on the basis of population. So if you are more populated in a particular state, you are going to enjoy 20%, of the entire store. And of course, consumption levels, which is 30%. So the 50, 20, 30, what do I mean by consumption? Where the VAT is generated, you have the opportunity of sharing a portion of it, over and above those who are not contributing as much. So what does this encourage? It encourages states to stimulate local commerce and improve VAT collection efficiency. Now, talking about the penalties and disclosure requirements, the Nigerian Tax Act also introduces significantly higher penalties now for non-compliance. And that includes, on a monthly basis now, not filing your monthly returns, we attract a penalty of 100,000 on a monthly basis. So the month you default and do your returns, it is a penalty of 100,000 in the first month of default. And subsequently, it's going to be attracting 50,000 monthly as long as that default test subsists. Of course, there is also, to make it more difficult, for people to run into all this, to run out of this law, there's a 5 million penalty now for awarding contracts to businesses that are not registered for tax. And of course, obstructing the payment of technology, or indecent tax officials is similarly penalized under the specific provisions of these tax laws. Now, coming down to individuals, a major reform has been undertaken on personal income tax. Now, a more regressive personal income tax structure has been introduced to secure and guarantee some degree of fairness. Now, individuals that end up to 800,000 right now per annum, they are completely exempted from tax. Now, those earning above the threshold, they are taxed in a particular, ascending order, starting from 15% and rising to 25% for annual income that exceed 50 million naira per annum. This reform also relieves the tax burden, like I mentioned, on low income earners, and it also ensures that high net worth individuals, they contribute more significantly and proportionately, to the revenue, to taxes. Now, in addition to this, the consolidated relief allowance has been replaced. Before now, we used to have what we call CRA, 20% of gross income, or 200,000, whichever is higher. So that used to be, but that has been eliminated now and replaced with what we call rent relief. And what does that mean? 20% of annual rent, that is paid. Of course, that's subject to a cap of 500,000. You can claim relief of as much as 500,000, provided you fulfill certain conditions. But one thing is imminent in this relief. It is only tenants who can claim it. So, unlike in those days, pre this law, when the poor, the people that were exempted, they were only the people that earn minimum wage, But now, irrespective of whether you earn minimum wage or not, the first 800,000 of your income, it doesn't matter at what level, is now at 0%, which means it is exempted. So before now, we used to have 7%, 11, 15, 19, 21, and 24, graduated like that, which puts the cap at 24. But now, with the 800,000 at 0%, so if you earn 2.2 million naira next, you are taxed at 15%, on and on like that. So which means somebody who is earning 3 million now will have only 2.2 million naira portion of that to be taxed under the. Of course, 9 million, 18%, 13 million at 21%, 5 million at 23%. So if anybody earns 15 and above, it's going to be 25%. So you'll notice and agree with me that with this, it is the rich or the people that earn more that will actually suffer the burden. And there's also one that is very interesting, and that is institutionalizing the restructuring by creating a tax onboard office. What does this mean? It only provides opportunities for taxpayers to seek redress where they feel dissatisfied, and all of these are going to be available across all the states throughout the federation. So that will be an alternative for anybody going to court.
Wow, that's a lot. But I think the talk around uh, excluding your first 800,000 is really great. I think it's generally fair, and a lot of people are going to like it. While you were talking, this is a joke. I was thinking that accountants will have a lot of work to do. That is, they've just created a lot of income generation avenues for accountants in Nigeria. How is the filing going to be done? Is it going to be like in the Western countries where each individual has to file with the tax office?
By the day, and quite frankly, it's a matter of time. Uh, that's why we're trying to ensure that we operate based on standard and best practices, that meet global expectations. The filing system is still going to be the same. The individuals are still going to be under the obligation of ensuring that they file to their state internal revenue services, subject to to the time. That there are two dimensions to it. Those who earn their income through pay as you earn, being employers, they will be doing that through the payroll as will be deducted from employers. So employers will still have the responsibility of remitting on their behalf based on the deductions. However, those who are running their businesses individually, or those who want to do direct assessment, those who don't earn their income, they earn their income, but they don't do it through the payroll, they'll still be doing direct assessment. But either way, all right, everybody will be entitled to the basic relief, subject to the provisions, subject to obligations, and of course, returns will be done as regular as possible on a monthly basis to the state internal revenue services in the case of private individuals. Of course, for corporate organizations, it's still going to be FIRS. But just like you said, accountants will have work to do. But then it's expected that people should get more enlightened so that they will not run foul of the provisions of the law under any circumstance.
Yeah, it's quite interesting that you say that people need to file every month. Um, how feasible is that, especially for those who uh, artisans, those who do menial jobs, those mechanics and welders and vulcanizers and bricklayers. I remember when growing up in Nigeria, we used to see local government people mount roadblocks, arrest people for not paying taxes. How is the new tax regime changing all of this, and how difficult or easy will it be for people to file?
Now, one of the things you are likely to see or experience is, with this harmonization, one thing that this tax law has done is there are taxes that are collectible by different. In fact, there are certain category of taxes that we call nuisance taxes. Still predominant in our system because they were imported as products of you know decrease promoted created in the military era. Now, right now, there is a probability or possibility of sanity being experienced. If you look at those artisans now, well, depending on how well they're able to account for their income, um, most of these people you are talking about, they are going to fall within the purview of people who will be completely exempted. So I doubt if there will be any artisan that will earn as much as will push him out of the tax exempt income, the 100 million threshold. So even if an artisan is operating under a business model, under whatever it is, as long as you are earning income that is, you know, 800,000 below per annum, that is automatic exemption from taxes.
So that's really quite interesting. But if you are exempted from paying tax because of your level of income, are you still going to be required to file? As this is done in a lot of Western countries, you file only once a year in the US, in the UK, I believe, as well, and Canada. You file only once in a year at a certain time. And whether you are paying tax or not, you still have to file. Is that the way this is going to run in Nigeria? Or if you're exempted, you just don't
Now,
need documentation?
now filing for there are two categories. filing for the category of individuals, filing for corporate entities. Now, for individuals, as far as individuals are concerned, those who are in employment, the only responsibility for filing, whether they are exempted or not, will rest on the employers. And that is what employers must do latest by 31st January of every year, based on payroll. Now, don't forget that what employer will be remitting, what employer is saddled with, is having to cope with those who fall within the bracket of exemption and those who do not fall within the bracket of exemption. So at the end of it all, on a monthly basis, when employers are going to be remitting to the state internal revenue services, they'll be remitting to the extent that those who qualify for exemption will not be having any figures in their favor, but they will be so recorded and registered by as people who do not fall within the category where they are expected to remit. Now, those who earn income within the category that qualify for deduction and remittance will have to be there. So at the end of of course, there is a schedule that accompanies remittance. So that schedule will always reflect those who are supposed to, who have figures to remit, and those who have nothing to remit. So that cannot be an
But
issue.
what about
But for
those who
corporate
are
organizations,
self-employed?
yes, they'll have to do they'll have to do direct assessment. They'll have to do direct
Is it
assessment.
every month?
There is a no, it's done every year. It's done every year. Direct assessment is supposed to be done every year. They will have to fill the relevant forms and they will disclose their income. Of course, that is why it is very essential. They may not be able to do it themselves, but that is why it is very essential that they secure the services of those who can assist them, tax consultants, who will help them to be able to do their personal income tax. Of course, they don't know anything about filing. So they will require the service of people who can assist them to be able to do that. So by the time you look at their income, you'll be able to assess them to tax. If there's any liability that they're supposed to pay, it can be established, and so will be done when it is due. But for monthly returns, it is expected. The only one that is applicable is those people whose salaries are paid on the payroll. They are the ones that are mandated to do their returns on a monthly basis. And how do they do that? They will deduct the payroll, the employer will fill the necessary forms, and the remittance will be done to State Internal Revenue Service on a monthly basis. Now, that is remittance. That does not preclude returns. Returns will be done at the end of the year
Okay.
based on the remittances. So by the end of the year, returns, all that has been done between January and December, what is going to be collated and remitted to and with the relevant returns form. So returns will be done once in a year, but remittances for pay deductions will be done on a monthly basis, because deductions are effected on a monthly basis from the payroll, and you can't deduct money that belongs to state government and you be keeping it in your kitty. So it is expected to be paid on a monthly basis.
All right. Thank you very much for
So,
shedding
but for
light on
those who are yes, so for those who are not regular income earners, they have to wait until the end of the year and they declare their annual income with the relevant forms, and they're going to do the returns.
We've been talking to a seasoned practicing chartered accountant and tax and management consultant, Mr. Peter Adebayo. Thank you very much for coming, and we hope to see you again.
I sincerely appreciate your inviting me today.
My brother, light e no dey, money e no dey, oil sef e no dey. Which kind leaders we get for dis country?
Naija, which way now?